Hi, I'm Ray Meadows, Prince of Finance. With me is my friend Hiromi.
Hi.
Last time we talked about inflation and how it affects her investments in the bonds. And now she has more questions.
Yeah. So then how should I invest? How would I invest it? Like, how would I know to invest if I expect inflation
Okay.
to be high?
So
is this going to be high forever? Like, do we know?
Well, the Fed says it's not going to be high forever, but I don't know if they really know what's going to happen. So just in case, we should be prepared. What we talked about last time was that inflation can affect companies differently depending on what kind of business they have. We talked about that bonds may not be a great investment for an inflationary environment. And so what we're looking for in terms of stocks is companies that have the flexibility to raise their price along with the inflation level. And we would like that their costs don't go up as much with inflation as the general economy inflation is going up. So that's kind of what we're looking for if we're going to invest in stocks. And I can think of 3 examples of those kind of companies. So one of them would be...
This is important.
One of them would be, a company that produces a commodity.
Okay.
And because typically companies that produce commodities like energy or something like that, they have a large investment in resources that's made a long time ago, and it takes them a long time. And then as prices rise, one of the first things that happens is commodity prices go up. So their prices that they get are going up. Their resource base is already in place, so they tend to make a lot of money. So think about energy companies, right? They spend all this money over years setting up to get oil and make gasoline, and then suddenly there's a big inflation. I mean, they can turn those dials on the gas station every day.
Well, it did go up in San Francisco.
Exactly. Right? So those guys can raise prices very fast.
Yeah.
And so they will tend to do well in an inflationary environment. Another one is telecommunications companies. Think of your cell phone service. They invested in all this equipment over the many, many years, and all that cost is already stuck there. And now suddenly, if there's a big inflation, they can raise prices. So those guys can do okay. And finally, we come to my top choice.
What is it?
Real estate! In particular, residential real estate, homes and apartment buildings, but even also self-storage, that kind of thing. So if you can buy a house, that's great. Or buy an apartment building, that's even better. Or if you can't do that, you can invest in companies that own houses or apartment buildings or even mobile home parks or self-storage facilities. Because those guys, they can raise rents every year. And so they're going to be fine. When inflation takes off, they just keep raising their price. And their costs are already locked in because they bought those properties already. And they have mortgage at a fixed rate, so their mortgage payments don't go up. And so they end up doing well with inflation. The same thing would happen if you bought a house and rented it out, right? So if you bought a house and rented it out, your mortgage cost is fixed, and then you can just keep raising the rent every year. And meanwhile, your mortgage is still sitting there doing the same amount every year. So over time, you make more and more money.
So when they raise rent, is this going by law, or they just raise it because they want to, or?
Yeah, they raise it because they can, and they like to make money.
Oh.
Now,
unless they have rent control.
Right, I'm not talking about San Francisco or Oakland or Berkeley. I mean, no one who invests in real estate should really be investing in those places because if there is a big inflation, they can't raise their prices.
You're right.
So it doesn't make any sense.
Mm-hmm.
So if you think there's high inflation, don't invest in real estate
In
San Francisco if you're going to rent it out. Now, it's okay if it's your own house, but it really doesn't help you that much as if you bought somewhere where rents are going up and your costs are fixed.
Oh, interesting.
So, does that make sense? So, I have some examples.
Wait, oil?
Uh-huh.
Wait, was it oil?
Well, commodities.
Yeah, commodities.
Or energy.
Energy.
Telecommunications.
And then real estate.
Residential REITs and self-storage REITs. Those are the best. Now, we can talk
This
about
is stock, right?
Stocks, or you can do it as an ETF. So, for example, let's take a break, and I'm going to put up a list of potential investments.